Hey everybody, Chuck Barone, Wednesday, September the 7th, 2022. Another interesting day here, guys. This market and watching this on a day-to-day basis like I've been for this show has just been what an experience. I mean, this is like, what we're seeing is just so different. It's like not a bull, it's really kind of a bear, and it's every day is a little bit of an adventure. It's been interesting. A lot of information to talk about today, but first, as always, I just want to thank everybody for their support for the channel, for watching the videos, all your likes and questions and comments on everything you guys do every day. We're eternally grateful. In the markets today, different day today, everything kind of going up today a little bit. Stocks up nicely today across the board. Stocks needing a little bit of a rally. They've been getting beat up pretty good. I think the market's kind of feeling like it might have some of these rate increases priced in now. They're digesting it a little bit better. It's either the market's feeling like they're a little more comfortable with the numbers because there's so much mixed data coming in, or this is just a dead cat bounce in a bear market. The bond market today also up. Rallying a little bit, the 10-year landing at 3.26, down 7 basis points, with the 2-year at 3.43, down 6 basis points. So as you can see, the spread between these is narrowing. It's down to about 17 basis points here. That's as close as it's been for a while. It was as high as in the 40s. So it's narrowing. Who knows? We might even see the 2-year or the 10-year tick back up higher than the 2-year, and the bond curve go from inverted to back to normal. It looks like that could happen. We'll see. It's going to be interesting to see how this bond market rally progresses. As we talked about in the video yesterday, this is the first bear market in bonds in a generation. So the traders are kind of trying to get the lay of the land here on how this is going to play out. And it looks like today, if today's any indication, it looks like this bond yield curve is going to flatten out a little bit. The dollar today down, small, but still super strong. 109.62 on the index. Right now, the dollar is king of currencies. I wish it could be reflected a little bit better at the grocery store and some of the necessaries we have to pay for every day in this country. But if you're spending your dollars overseas, you're having a great time right now because everything's on sale. Today in metals, with the dollar weakening a little bit, metals rallied a little bit, up today small. Gold at $1,718 per ounce. Silver at $18.56 per ounce. I wish it would kind of either make its mind up, rally up, or come back down. I'd like to see if I could get silver at $15. I guess I would be even thinking about buying some myself, again, to get back, add to my stash a little bit in silver. Oil down today, actually down pretty big. $82.22 for West Texas Intermediate, down almost 5%. Natural gas tanking today, $7.83, down almost 4%. They're talking about inventories. They're talking about less demand in China for oil and all kind of weird doings in the market. It's kind of funny because OPEC just announced a 100,000 barrel per day production cut, which was, I guess, the 100,000 they gave to Biden. Now they're taking it back. Market had a big yawn for that because OPEC is already producing 200,000 barrels per day less than their quota. So it's, they're going to cut it 100,000, and they're already 200,000 below. Most people don't know that, but it's really a non-event in the oil market. Bitcoin today rallies late. It was kind of having a crummy day, but it rallied late, got above 19,000, was down there getting close to that 18.5 support number, but it bounced from there over 19,000 today. We're going to watch Bitcoin pretty closely because I think it's due for one of the other guys. It's either going to make a big break to the upside or a big break to the downside. It'll be interesting to see how it turns out. In data stuff coming in today, important information. First, we had the trade deficit information this morning. Trade deficit coming in at a 9-month low, falling 12%, which is nice. Still at $70 billion, though. It's I guess it's better to pay $70 billion than, $7 or $80 billion for the same stuff. But, the dollar being strong, I think, helped bring that deficit down. Nice to see the number falling. I'd like to see it fall to a little bit closer to neutral and zero than $70 billion in a month, but it is what it is. It's coming down. Also today, the Fed releasing their beige book information. Now, this is something that the Fed typically puts out a couple of weeks before their open market committee meeting, which is coming up later this month. The Fed beige book today said that outlook for growth remains weak, with expectations of further weakening over the next 6 to 12 months. So the Fed basically, in Fed speak, I'm guessing that means recession is here and going to get worse over the next 6 to 12 months. They also made note that prices still remain highly elevated, meaning inflation is here, and their expectations for that to come down are marginal right now. And they also made note that real estate has weakened noticeably, meaning that they're noticing what's happening in the real estate market, as we all are. And it's interesting they made note of that in their beige book. So what the Fed's saying is likely rate increase of 3/4 coming this month. The inflation numbers are still high. If what's happening overseas is any indication of what's going to happen here, they're going to remain high or get higher. It's going to be interesting rest of this month. A lot of pressure on the Federal Reserve to make these calls correctly. We'll see how they do. Interesting news you guys need to hear about today. Some interesting stuff happening. First is, of course, one of the things we look at a lot on this show is real estate. Because I'm in the real estate market, it's kind of like a bird's eye view. As we've been telling you guys, prices coming down. Here in Las Vegas, we gave you guys an idea about at least a couple of weeks ago, in the middle of August, saying that house median price in Vegas was coming down from a peak of $480, would likely finish the month of August at $450. Well, here it is in the Review Journal today, Las Vegas's paper. Home prices continue fall, and the median price for August came in at $450. We were looking at the MLS today, but because it's so early in the month, there's not very much data. But the trend line, even now moving into September sales, looks like the trend line for real estate prices is still down. More and more listings cutting their prices. So real estate, guys, the correction is well underway. We'll see where it goes from here. If you're a person in the market for a house, save your pennies, guys, because you're going to have your opportunity. We'll see how far this can really go down. I think that, when you're coming down from 480, a 10% drop, a 10% reduction, which would, I guess, be a pretty normal real estate correction, going to bring prices down $50,000 to the 425-ish range. I think that would be way more palatable for buyers at these rates. I think it's still going to come down even further from there, though, because just to make the numbers make sense for people applying for and trying to get mortgages, with mortgages now back up over 6%, you have to compensate for that with price declines just to make the numbers make sense. I mean, how many people buying houses want to look at a $3,000 a month house payment? I know I wouldn't, and my income is not a terrible one. So that's one of the things we're going to continue to talk to with you guys, because we have some information on that. We're in the market. We kind of have some information we can pass along a lot of times, like in this particular case, weeks or even close to a month before the public, the real public, the newspaper reading public finds out about it. Also, some interesting stuff today. Goldman Sachs came out today. One of their analysts came out. And now this is interesting because he said the United States is likely to avoid a recession. So he believes that we're not in a recession yet, and he's pointing, of course, to the jobs. And he says that we'll likely avoid a recession for 3 big reasons. Number one, declining inflation. And of course, he's pointing at the price of oil and gasoline as the main drivers of that decline. He said that the strong jobs market, which according to the statistics and the numbers we're getting, is true. And he's also saying that growth is kind of coming down, but there's not a collapse in growth. Actually, the economy, he believes, is still growing. they're showing this analyst says that the U.S. economy will grow 1.6% in 2022, and it'll grow 1.2% in 2023. Goldman's not a company that pays people to be stupid. So I thought that was very interesting. We're going to look at this a little bit more closely because everything is so negative. And if you're a contrarian and you like to believe, or you like to believe you are like I do, a contrarian right now, this would be the contrarian view to the view that everybody else has that we're going over a cliff or already have. So I just thought that was interesting and wanted to pass that along to you guys. Also today, another interesting thing I saw today, this is in Australia, they're talking about the Bank of Australia will only approve car loans for people buying electric vehicles. I don't think this is going to be something immediately. They think they're talking about phasing this in over the next couple of years. But now, can you imagine what's going to happen to the price of gasoline-powered cars and hybrid cars if you can only get a car loan on an electric car? I think there's going to be a pretty quick market spring up for people who will finance gasoline-powered vehicles. I don't know how well that will work. And it was interesting because this article kind of implied that if this worked or was in any way successful in Australia, the United States was next. Also, another interesting thing, I was thinking about this today. I actually was conversing with a buddy of mine who's a pretty high-ranking executive at one of the hotels here, and he was talking with his broker, and his broker was kind of expressing a little bit of fear about margin calls. I guess his broker's a big shot in New York, and is saying that especially in the energies stocks, that margin calls coming in as these stocks are declining is like scary, scary stuff, because guys are having to liquidate positions to meet these margin calls, taking big losses, and also putting a lot of downward pressure on the markets. Now, they don't report what the percentages of stocks are. At least I haven't seen it in the journal recently, of what the percentages of stocks out there, how many of these stocks are bought on margin. I just thought that this was an interesting thing that I heard, wanted to pass along to you guys to ponder. What do you think, guys? You think, all these people and these institutions buying on margin, being forced to sell with these weekly declines over the past month or so, you think that's been putting some pressure on the market? I wouldn't be surprised if it is. And finally today, lastly, a little bit of humor to finish the show. I was reading today that there's going to be a new private equity fund coming here, and it's going to be headed by Kim Kardashian. This just goes to show you that, she's a genius in her own way at what she does, but really a private equity fund? The Kardashian fund, really? She's going to get in there and go against Blackstone and BlackRock and Carlyle and all these other funds? Come on, man. This is what I call further signs of the apocalypse coming, okay? When anybody thinks that they can get into a market and do, even if it's only in name only, be the face of a private equity group, I don't know. What do we need? The meteor to be like burning through the atmosphere to see what's coming here? It's just bananas, guys. The world's off its rocker. Every day is a soap opera. Every day is a big drama. We get to live through it and be amused by it. Kim Kardashian, private equity fund person, right up there with Schwartzman and Fink and all these geniuses. It's like my friend Greg Manarino would say, you just can't even make this stuff up, guys. Anyway, that's all we got for today. We really appreciate your support. If you like what you're hearing, of course, hit the like button. Share this video with your friends. Let them know what's going on out in the world. Ask your questions in the comments. Comment, of course, like always. And if you got an in-depth question, ask Chuck Barone at gmail.com. Big data coming tomorrow, guys. We'll see you then. Until we do, take care. Thanks.